why and how you should have a good finance year end close for your business. A guide for business owners and stakeholders. The goal of this session is to explain why a good and fast year end close is critical for business success. Number two, to identify key finance, tax, and reporting areas that every business owner must watch out for, particularly the small and medium scale businesses. I will also try to highlight common challenges that delay year-end close. Why you see some companies, the year has ended many months into it, they can't find financial statements. But here we're not even talking about year-end now, where the year has ended and just with financial statement. We are saying how you must do it even before the year ends. And when I say year-end here, I don't mean December. It can be anytime. Your company's year-end can be December. Another company can be October. In some other cases, it could be May, any time of the month. But whatever your business chooses as their year end is what matters. To share practical steps to achieve smoother, good finance year end close, and to encourage early planning for stronger and strong financial discipline. Let me say something very importantly. If you are watching this, a good and a fast year end close is a strong indicator of how well a company's finance function is performing. Dear CEO or owner of a business, we are in December. It's at this time of this recording. And assuming your business year end is December, assuming it's December 31st, assuming. Did you see what the financial report of your business is as at November? Just to see how that 1 month extra that will now end the year. Did you have an idea? That is what a good finance year end close is about. It means preparing to even see the numbers before the year end close. What is the importance of having a good finance year end close? If you do your proper year end close well, to save you time, and it will direct your time to do more value adding activities such as planning, analysis, and strategy. A good year end close improves financial management. Yes, good financial management. How? You're looking at your business and you're looking at like, okay, it's November, and what you observe that it's at November, they spend so much money on diesel and less, and less on normal PHCN. You can say, no, let's avoid too much cost on diesel. Let's use more of the inverter or use more PHCN if it's cheaper. You're seeing some of your records before the year end helps you to adjust. The point here again is it helps you to review your tax exposure early for tax planning. Yes. Imagine you have seen your numbers as at November, assuming your year end is December, and you see that your profit margin is going to be about 20 million or 15 million, or a tax you will not be able to pay. And the money is there. And there's some valid business experience you're supposed to enjoy, and you didn't incur it. Or even you yourself, you have not paid yourself handsome salary. It is the time to bring those expenses in. Why? Because you have seen it before the year end. It does not mean that, yes, at the end of the year, you cannot accrue. But any good tax person may investigate and say, why do you have huge accrued expenses after year end? So why don't you plan and incur the cost now? Good business expense, good personal cost to reward you for the good job you're doing as an entrepreneur or as a business owner or as a director of a company. A good finance year end close helps to inform stakeholders early. Who are stakeholders of your business? Suppliers. When you see that you have excess money, you can pay people banks lenders. A good year end, a good finance year end motivates staffs and reduces turnover. How? When you see that you're going to make a lot of profits, you can try to give staffs bonus because you have been paying them low because you were not sure of how the business will perform. And you now find out that, yes, we have some margin. Knowledge of that will help you to push things up a bit. That's the essence of good year-end close. one other important thing it helps you to do is investigate or identifies weaknesses in the system that you can quickly correct before the end of the year. Maybe you hear that cost of sales of the business is very high. And you look at the revenue of it, you find out that by your knowledge, you know that we are not supposed to spend up to this cost. You want to investigate it and you help make corrections that is necessary. A good year-end closing improves governance. It helps in quick decision making. That is why you ask yourself a question: does your business, the current business you are leading, does it have proper year-end close? What are the critical areas you should watch out for that your finance team should watch out for when it comes to year-end close? The first area is the area of financial reporting. What should they be looking at? One of the major things you should look at is first bank reconciliation. Normally, any company that is doing good year-end close would have been doing good month-on-month close. That means the end of every month, they give their financial statement as at now, management account as at now, as at this month. So that means they know. That means there can never be a problem of bank reconciliation where the bank balance is different from what they're reporting in the financial statements or in the application that you use, on your Excel sheet that you use. There can't be anything like that if month-on-month reporting has been happening. But for the benefit of the doubt, at the close end of the year, you'll be looking closely. You'll say, there expenses that were wrongly passed to a particular year were not supposed to pass. Are there things that did not pass through the books that were supposed to have provided for or accrued for? It could even be, it could be anything. Those are the things you look at. Are there assets that we did not properly pass? Good financial reporting. These are the areas you should look at. Tax reporting. Yes, a good year-end close helps you to look at your overall tax exposure. It's very important. Number one, VAT. Which if your company pays VAT, maybe you charge VAT and you're supposed to pay VAT, you know sometimes it's not always accurate. And you know that latest by the by January 21, all the VAT for January to December must have been accurate. So why don't you look at it in November now and see, okay, what is the numbers doing? Where did we miss it? Or what can we adjust? Than you reporting a financial statement for which you have not paid the correct VAT. Withholding taxes. If some clients have been charging, your clients have been charging you withholding tax, your customers have been charging you withholding tax, they did not withhold tax on your money. A good year-end close will help you look at to say all the people that deducted withholding tax from us, have they remitted it to the FRS? Can we see it on our portal? You don't wait until the end of the year when you are supposed to pay tax. Then you are not saying, do I have credit note to clear it? Pay. It may not be perfect, really. But you have been paying pay every month. But there could have been errors in some places. A good year-end close helps you to know where there's difference between what you should have paid and what you have not paid. CIT, company income tax. If you have a very good finance department or good finance accountant, they can tell you what your company income tax exposure is month-on-month basis. At the end of this year, at the end of the month, they can tell you, as at now, this is CIT exposure you have. A good year-end close helps to prepare ahead so that you will not be overly exposed to company income tax when you can plan it and many other deductions that you're supposed to have done. Management reporting. What does management reporting? What should you look out for when you're looking at year-end? You're looking at the fact that profitability is as you want. You look at the profitability projection because your profit determines your taxes. So good year-end close helps you to manage profitability. Helps you to compare between what you plan, budgeted for a particular cost versus the actual. If you're doing a month-on-month, to be helping you to see budget versus actual, and you can help you to make informed decision. It helps you to even know your cash flow planning, what you can do with the cash you have, whether to invest some and earn more returns or something. What are the challenges to having a good, fast year-end close? From our experience as a firm in dealing with many medium-scale businesses, what we have observed is that the finance team lacks knowledge. They know how to pay money through the bank, but they do not know major financial reporting. Simple tax, they don't know. So it's not their fault. It is us. It is you, the owner of the business. It's you, the director of the business. So most delays in financial year end close is not accidental. They are systemic. The staff are not trained. The management does not even help, does not drive them to report properly. Some companies have very poor reporting, management reporting structure, culture. Like, when I say poor management reporting culture, if your current business does not release month-on-month accounts, as an up-to-date month-on-month account, then you know that you can't be talking about year-end close when you have not been reporting month-on-month or quarterly or half-yearly. You know, there's inadequate accounting system. Maybe the system you use, the account application you use is not in real, is not fit for your kind of business. It's smaller. It is compared to the size of your business, or does not fit for the kind of business you do, because not all accounting applications are good for specific industries. Or there's poor communication between your business and your auditors. To be honest with you, we believe in audit, but we also believe that there must be strong controls so that you don't see errors after the event has happened. Or like our own audit department does, sometimes we even engage our client to say, let's just do what they call half year, meaning 6 months into the report, into the period, they come and review the books. Peradventure, if you're not strong enough to do your own reporting. Internal communication between your company and the auditor is very, very vital for good year-end close. So what are the things you need to do to aid good and fast year-end close? Number one, check, must you use sound audit-friendly accounting system? The accounting system must be in line with the way your business is structured. Number two, you earlier must have been tracking your resources and expenses accurately with documentation. Number three, you must have been preparing monthly or quarterly financial statement, what we call management reports. Number four, you must ensure that monthly statutory remittances, the valid ones, particularly VAT, are remitted and completed. As year-end close like this, you can just decide to do sample testing, like in your GL for electricity. How many of those bills do you have the receipts? How many of your withholding tax that people deduct when you have been paid? How many withholding tax that you should have charged, have you charged and they remitted? Simple test, even without your auditor coming. Things that can aid good and fast year-end. So what action should you take as we close? One, honestly evaluate your current finance process. Is it adequate enough? Is it strong enough? Does it meet the things that we've just discussed? Number two, engage a professional firm, accounting firm. It can help you fulfill your vision. They can help you achieve your vision. They can help you create systems that works, not just helping you to pay bribes and do things wrongly. Number three, plan early and communicate with key stakeholders. Tell your financing, this is what I want from you. Communicate your financing, I want my financial statement at this time. Strengthen the systems. Teach your staff. Let your staff be trained on the basic things they need to know. Maintain regular and financial and tax records. And keep. If you do all of these things, you prepare your business for good and fast year-end close. Thank you.